The S&P 500 is at a critical moment, and whether you're in stocks, crypto, or just watching the economy, what happens next here could shape the entire financial market. Let's break down this SPX weekly chart and where the US market may be heading in the next few months. First, big picture. We're looking at a multi-year uptrend, interrupted by a major correction between 2022 and early 2023. After that, market recovered aggressively, and as of now, the S&P 500 has reached new all-time highs around the 6,300 level, before experiencing a sudden rejection last week. What's important here is the structure. The S&P formed a broadening pattern during the correction, followed by a V-shaped recovery. The recent pullback, seen as a red candle of about minus 4.7%, looks sharp, but in context, it's likely a normal retracement within a bullish uptrend. Now, let's talk momentum. The weekly candles have been making higher highs and higher lows since October 2023. Even this latest dip hasn't broken the prior swing low. That means, technically, the uptrend is still intact. The question is, will the bulls step in and buy this dip? Let's check indicators. The MACD is still bullish but may be slowing down, signaling potential consolidation. The RSI is sitting close to the overbought zone, showing that the index was due for a correction. However, it hasn't fallen off a cliff, which supports the idea that this is just a reset, not a trend reversal. So what comes next? If SPX bounces from here and reclaims 6,260 plus, the market could retest the 6,400 zone, and if bullish momentum kicks in, possibly move towards 6,600 to 6,750 by late Q3 or early Q4. That would mark the next major leg in this bull cycle, driven by earnings season, soft landing optimism, or interest rate cuts. But if the sell-off deepens, the first major support zone to watch is around 5,950 to 6,000. That's where the previous breakout happened. If that level doesn't hold, the next logical support is 5,600 to 5,750, which aligns with consolidation zones from earlier this year. Now, let's zoom out for a second. The S&P 500 is more than just an index. It's the pulse of the U.S. economy. When it breaks out to all-time highs, that sends a strong message to global markets. Risk is back on. That often pulls crypto and tech stocks up with it. But a reversal here could shake investor confidence, triggering rotation out of high-risk assets. So what should you be watching? Watch volume on the bounce. Low-volume rallies tend to fade. Track VIX. If volatility spikes above 20, the market could stay choppy. Monitor macro news, especially Fed rate updates and inflation reports. To wrap this up, the S&P 500 is still bullish on the weekly chart. This pullback looks healthy, but if the 6,000 level breaks, bulls will have to fight to maintain control. Otherwise, we're likely to see new highs into August and September. If you found this breakdown useful, don't forget to like the video. Subscribe for more market insights and drop a comment. Where do you think SPX is headed next? Minus 6,600 or 5,600?